Welcome back, Alpha Hunters. The markets are closed for the week of June the 23rd. So let's take a look at what went on this short trading week. So we started out on Tuesday, nice little gap down from last Friday. If you want to remember last Friday, even Thursday, we kind of topped out right before the last hour last Thursday, and then we traded lower on Friday. So we come out on Tuesday and just started trading a little bit lower from the gap down, and then nice little rally into midday, and then kind of flat to close out then Tuesday. This is a very common theme that happened the rest of the week. Another gap down on Wednesday, and kind of traded a little bit lower, found some support levels, got a little bit below Tuesday's low on Wednesday, and then made a nice little run in the afternoon, and then the last about hour and a half came and then just kind of dropped back down pretty close to the daily lows. Again on Thursday, gap down. But this time we got bought up immediately for the first roughly hour. Nice little kind of sideways action then for most of the morning up until like midday. And then we went on a little bit run into the close. And then another gap down on Friday. Another little gap down on Friday. Nice little run up until midday. And then when you got into the afternoon session, we kind of had a little bit of a rollover to the daily lows and even took out the daily lows right there. But it kind of settled up a little bit higher off the daily lows. But last week, I also did mention that, we're going to see dip buyers continue to come into the market here for a little bit of time going forward, maybe, another couple of weeks or so. But you can see we're starting to trend back in that bearish direction. And I actually almost took off the moving averages here on the 15-minute chart because it just kind of gives you a little bit of understanding that, hey, we are breaking down through some of the moving averages throughout this week. And then even looking here at an hourly chart on the SPY, you can see that we're right on top of that 100 moving average on an hourly time frame. And then if we do kind of break through that, well, obviously we're going to have a pretty good support here around 430-ish. And then, back down to the 200 moving average. There's some pretty good air pockets kind of sitting in here that if we start to kind of break down a little bit more, I mean, we can move down some price levels pretty quick. And that's kind of what typically happens when you see the market turn is it's kind of like, you know what, here's where the market will dip by. Here's where the market will dip by. And it just keeps breaking down until you realize, well, you're down below a level that, well, we're no longer going to be dip buying at that point in time, and because the momentum has now shifted for the market. So just keep that in mind going forward. So take a look here at sector performance throughout the week. Nice little outperformance on the week on the XLV, really being up about 1%, which most other and all sectors were actually lower this week. You can see the XLRE on the lower ends, or real estate, was kind of lagging behind. I know they got hit pretty good on Thursday and Friday. So there you go on the XLRE and real estate. Tech also on the lagging side, huge weighting this week. And really, it was kind of a tale of two tapes this week. Wednesday and Friday, big tech was getting hit pretty good. Tuesday and Thursday, the rest of the market was getting hit pretty good. So basically tech and the rest of the market just kind of rotated days on who was going to be more bearish. Energy's also underperforming. They had a really bad day on Thursday. Utilities also underperformed this week, and they got hit really, really hard on Friday. They were actually doing pretty good. I'm going to highlight this line here. You can see is, kind of outperforming on the week, and then Friday came out, and people just started selling utilities the whole day. I mean, just from the high to the low, just all day selling. They were actually doing pretty good on the week up until Friday. And then financials, industrials, kind of in line with the market, with discretionaries, communications, materials, and staples, giving a little bit of outperformance on the week. Federal Reserve balance sheet came down this week, almost 2.25%. So we'll see if that continues to fall. I'm going to imagine it probably does continue to fall, as I've kind of been on that theory of as the Treasury starts to refill its coffers, the Fed is going to start peeling back more and more, as I think they were just trying to hold up the market so that the Treasury could refill its general account, and they didn't want to do that while the market was in turmoil. Here's one thing that was kind of surprising. So we moved lower every day on the market, but yet the VIX, nice little gap up on Tuesday. Now, Jerome Powell did talk this week, Wednesday and Thursday. He talked to Congress, and we continue just to see the VIX continue to fall. Now, if you are wanting to be bearish or trying to be bearish, that is what you want to see. You want to see the market turn, move bearish for a little while before the VIX bottoms. So remember, we topped on the market last week, last Thursday, but the VIX might have bottomed this Thursday. Just an interesting observation. That's all I'm saying. But we actually were kind of lower on the VIX even today, but we saw some pretty sharp selling in the afternoon on the SPY, and that kind of got the VIX to start to turn up a little bit. I'd say one of the more intriguing moves of the week was the dollar index. Nice little retest earlier in the week, Tuesday, nice little retest higher, and then it fell off, broke down, and even on Thursday broke the low from last week, and then that was it. After that, it kind of went on a run. And this might be a retest up into some previous low or support spots, which are now resistance. So we're just going to have to see which way the DXY eventually winds up moving, because we also could have just retested this little double bottom that we put in over the past 2 weeks. Could have been into some previous resistance levels, which are now support. So it's kind of getting trapped in here. If I zoom out, you can see we got some lower highs coming in right on top of a pretty strong support line. But if we do get below that 101, I mean, the dollar, yeah, might just be dying off there for a while, but still a little too early to make that call. The 10-year yield continuing to consolidate sideways. It's just mostly been moving sideways here over the past couple of weeks. But if the yields start to push higher, it's going to really continue to hurt equity valuations. Looking at the 10 to 2-year inversion yield, and we can see that we are making our way back down to the lows that we had in March on the 10 and 2. So we'll see what happens, but I mean, maybe we come and snag that low and then we start to move higher. I mean, who knows? GLD had a pretty nasty breakdown this week, and actually the gold futures tell a little bit of a better story, because you can see very clearly Tuesday, Wednesday, Thursday, very nice breakdown, retest into the breakdown support level that is now resistance, with a nice little upper wick on Friday, and now it looks probably pretty good just to continue to move bearishly. And this is kind of coming on the back of, the dollar was breaking down over the past couple of weeks, and yet we weren't really seeing gold continue to push higher. So we might see a little bit more of a pullback here on gold, and I would like to be bullish on gold at some lower levels, possibly down here around 1750 or so. Something like that sounds pretty good to me. So the HYG, the high yield corporate bonds, were looking pretty good coming into this week. They were above all the moving averages, but then 1 week later, Tuesday, Wednesday, Thursday, Friday of this week, it just came down every day, and it is not looking the best. So got a nice little lower wick here today on Friday, and we have another little lower wick at this spot back on May the 4th. So we'll see what happens, but I'd imagine if we get below the lower wick on Friday, we're probably just moving down to that low spot that we put in kind of towards the end of May. Now, what was kind of interesting is not all the bonds actually were that bad this week. The LQD was not doing the best, maybe Tuesday, Wednesday, Thursday. There was some pretty good support in there, as people were buying up on Tuesday and Wednesday. But even on Friday, a nice gap up on the investment grade side of the bond market. So this just might be a little bit more of that signal of flight to safety, as that is a pretty strong move in the bond market. And if you look at the TLT, they also had a pretty nice strong open as well. So we'll see kind of just what happens and continue to monitor what goes on in the bond market. But yeah, that was a pretty strong open on the LQD and the TLT, way better than the HYG. Now for the week over week options change, well, man, this isn't too obvious at all, but man, we saw a lot of selling. And it wasn't just on the put side. I mean, look at some of the calls out here. We hadn't seen really any selling of options while I've been keeping track of this weekly like this. It's mostly just been nonstop buying. We've seen a couple of weeks where we've seen a little bit of selling, but nothing like what we saw this week, as far as like in the 200,000s for the September 15th and this next Friday, the June 30th. So are people saying, you know what, I'm no longer bearish? Or are they saying, hey, you know what, I'm willing to own shares and get put to shares if the stock market falls? So it was just really interesting to see some of the selling that kind of came in this week, because we all know, as we just looked, the VIX is really low. So that means premium for selling options right now is really low. So I have no idea kind of what's going on. I kind of want to think that some of these people that have hedges on are actually taking them off, as you're not really getting paid any premiums to sell options for income. The weekly investor sentiment survey came in a little bit less bullish than it had been over the two previous weeks. We've seen it climb a little bit. This week, we actually saw it come down early Thursday morning when they released it. So still pretty bullish, but I would say the more notable thing is people picked up a lot more of the bearish sentiment. Running through the market ETFs for the week, the RSP, the equal weight SP 500, you can see came out and started just trading lower right away. Huge gap open between last Friday and this Tuesday. Now, Tuesday, part of it was they did pay a dividend, so not all of it was just purely on a gap down like the rest of the market, but it did reject off of a previous kind of top area that the market hit back in December. So maybe it is just hitting a resistance and coming back down. We'll see. The DIA, the Dow Jones Industrial Average ETF. Now, I kind of mentioned this last week that if we do break down and come down to close below the top it got above last week, that it would look like a false breakout. And really, it kind of even did it last Friday, but it was still just kind of in the upper ends of the zone that it kind of broke out above. But obviously, there was a pretty clear reversal coming back down this week. So is it going to be a false breakout and now it's just going to move back down even lower? Yeah, I mean, time will tell. We'll figure that out. All right, the IWM, the Russell 2000 ETF. Now, I kind of mentioned this as it was breaking out, is watch this zone that it put in tops back in November, December, as that is going to be a really tough spot to get through. It did not get through it, especially on this initial push, and we saw it break down this week. And that air pocket it found on the way up, well, it kind of found it on the way down, especially you see it breaking down hard on Thursday and Friday. So a couple scenarios that could happen here is, well, it could break out and now it's just going to come back and retest into this previous kind of resistance spot right here around 179. And if it does and continues to move up, well, there you go, you're all good. But if it does continue to move back down, well, you are going to have, well, a little bit of a head and shoulders type action here. I know this shoulder that's over on this side is a little funky, but it's still going to shape up like that a little bit. So we'll see which way this plays out. But if you're going to try and play it right here at this level, I would actually be leaning a little bit more on the bullish side, just because if this was the breakout, you're going to want to get in on the retest, which means right here's a pretty good spot to do it, looking for it to continue bullishly. But that kind of just goes into what your expectations are for a lot of the other things across the market. The Qs. Well, people continue to buy the dip on the Qs, and I still think my theory of we're going to see the rest of the market, like the IWM, the equal weight SP 500, a lot of those stocks are probably going to lead us down here going forward for a little bit, maybe the next like 2 months, and then I think they will get so cheap, like 95% of the other stocks will be so cheap that people are going to be forced to basically give up their high valuation tech stocks and go get stocks on discounts, which then we will see tech stocks probably eventually get hit, which that would really take the market down even farther, just because of the discrepancy of valuation that we would see between the 95% and really, I mean, probably even really you just call it the 1% of stocks. And take a look here at the SPY, nice little structured pullback here. You would think that we're going to start to see some kind of bullish move here over the next week. And if that starts to break down, we might see momentum really start to flip to the bearish direction. But if we just kind of steadily pull back down to 425 or lower, eventually we're going to get to 420. And if we just do it by doing like a 0.5% a day or 0.75% per day down, like we'll get there. And then at that point in time, even though you don't realize, wow, we got all the way back to 4,200 on the SPX and 420 on the SPY, what are people going to do then? What's their mindset going to be? Is like, whoa, we just pulled back. We were just at 4,400, but we didn't have like any significant down day. Like if you pulled back 2.5%, people would talk about it, right? But if you just pull back about 0.5% or 0.75%, roughly like every day, then it doesn't seem like such a big deal. But that's kind of where it's difficult, because we did have such a strong move at the end of May, beginning of June, that people are going to try and buy the dip. But I am still in the camp that we would go back down to October lows. And if we actually got down there soon enough, maybe by Q4 of this year, we would break the October lows and probably go find like a 3,300 level on the SPX or 330 on the SPY. So I'm still in that camp, but it's just going to be difficult to see that here on the near term. But yeah, there's not a lot kind of going on right now in the market, as we are in that lull period before next earnings season. So let's just have a great weekend. Alrighty. Take care, Alpha Hunters.